Hello, and welcome to Lesson 18, Sales Tax. Sales tax is an issue that all local unions should be aware of. We wanted to take the time to provide you with some general information on sales tax and to recommend you discuss this matter with your auditors or lawyers. If a local union sells merchandise or tools to their members, there may be a responsibility to charge sales tax on the total amount sold. Wikipedia defines sales tax as a tax paid to a governing body for the sales of certain goods and services. Retail stores like 7-Eleven or Target will charge sales tax on all products sold at the point of purchase to the customer or end user. Sales tax is generally governed by state jurisdiction. A retailer is required to collect sales tax on all taxable products at the point of purchase. On a monthly basis, the collector would report the sales for the month, the tax collected, and would send the tax collected to the state. So let's look at a local union. The local sells t-shirts, baseball hats, pins, ironworking tools. In this scenario, the local is the retailer. The member is the end user. If this is what your local is doing, you may have a fiduciary responsibility to your state jurisdiction to collect sales tax on the state's behalf. If you sell merchandise to your members and are not currently registered, we strongly recommend you consult with your auditor or lawyer on this matter. In addition to a sales tax on physical goods, states can also assess sales taxes on items such as parking, IT services, magazine subscriptions, or any other service that the state has legislatively defined as taxable. You should be aware of what your jurisdiction considers taxable goods or services. Now, there are some other taxes that are related or similar to the sales tax issue. Use tax. If the local union purchases goods for use at the local union is the end user of the product. If the vendor does not charge sales tax, the local would be responsible to pay use tax on the purchase. And let's talk about Canada. Canada has multiple versions of sales tax. GST, Goods and Services Tax, which is a value-added tax levied on most goods and services sold for domestic consumption. PST, Provincial Sales Tax for each province except Alberta. HST, Harmonized Sales Tax. This is the combination of GST and PST for certain provinces. Now, we put together a couple of scenarios that are often brought up when discussing sales tax. The international and the HQ team does not know the laws in your particular state or province. This is why we encourage you to discuss this matter with your professional consultants. They should be aware of the requirements in your state or province for sales tax. We purchase items at cost and then sell to our members. This is done as a convenience to the members. The price is set to just cover our costs. In other words, we don't make any profit on these sales. Do we still need to collect sales tax? This is a question for your professional consultants. Each state has a strict definition as to what constitutes taxable sales. We issue monthly newsletters to our members and charge $5 per member per month to offset the cost of producing the newsletter. Do I need to charge sales tax for this? What about if the $5 per month is collected as a member assessment? Does this change the responsibility for sales tax? Some states charge sales tax on subscriptions. Your professional consultants should check to see if this type of scenario would be taxable. Our training fund sells tools and educational materials to our apprentices. Do I need to collect sales tax on items sold from our 501c3 educational organization? Training funds are generally recognized as 501c3 organizations under the Internal Revenue Code. Your consultants can check for special exemptions that may apply to training funds. As the FST, I always try to negotiate the lowest price possible when purchasing items for my local union. For example, we replaced 250 chairs in the meeting hall. I was able to negotiate the price down from $75 to $50 per chair. In another attempt to reduce the price even lower, the vendor asked if we were a nonprofit organization. When I said yes, he told me that they would not charge the 8% sales tax and that I should consider that as the final discount for the purchase. When goods and products are purchased for use at the local union is the end user. In this example, if the vendor did not charge sales tax, the local union should pay use tax to the state, which would be calculated as the sales tax rate multiplied by the total cost of the chairs. So in this example, 250 chairs at the $50 negotiated rate is $12,500. 8% sales tax on that would equal $1,000. If the sales tax is not included on the vendor invoice, the local should report the purchase and pay the state the $1,000 in use taxes. In Lesson 8, we talked about the receipt section entitled Collected on Behalf of. Sales tax collected for the sale of products and merchandise to members would be considered receipts collected on behalf of. Under the guidelines of Lesson 8, sales tax would not be considered income. The local is, once again, acting as an agent on behalf of the state to collect taxes and remit to them. Later on, Debbie will talk about how sales tax will be accounted for in QuickBooks.
To begin this portion of the lesson, go to the QuickBooks Online Demo account as discussed in Lesson 4. As Gay mentioned, sales tax is a fee charged by government agencies for the sale of products and services. The fee is usually a percentage of the price of the product or service. The buyer, your customer, pays the fee to the seller, you, and then you pass it on to the government. As advised, get together with your accountant, lawyer, or other professional consultant and determine if you are required to collect sales tax on your products or services. If the answer to that question is no, then breathe a sigh of relief and celebrate with a piece of your favorite dessert. But if the answer is yes, what do you need to do? First, you need to create an account with the government agency that manages sales tax in your state. You will get an account number and they will tell you how often you need to file and submit your sales tax reports. Second, you need to set up sales tax in QuickBooks Online. Select Taxes from the navigation bar. You will have an option to set up sales tax. Now in the demo account, you may need to click a button that says Make the Switch. You will be asked to verify your physical address. Sales tax calculations are based on this address, so it's important that it's correct. If it is correct, select Looks Good. If it is not, select the pencil icon to correct it. Next, you will be shown the agency to whom you should pay sales tax based on your location. If you have locations in more than one state and are required to collect taxes, you may need to add other agencies. However, that should not apply to most of you in the ironworkers community. When you accept all of these settings, QuickBooks Online works on calculating tax rates and setting up the agencies. Indicate your filing frequency, usually monthly. You will eventually see a screen confirming that your setup is complete, and you will be taken to the sales tax page. Now, in an earlier lesson, you learned how to add products and services that you might sell. Let's say that I will be selling hats. Go to Sales, Products and Services, select New from the top right of the screen. pick Inventory. The name of the product I'll be selling will be IW Baseball Hat. We don't sell enough items to need SKUs or categories, so we'll skip those fields. I have 15 hats on hand as of April 15, 2020, and if I get down to 5 hats, I want to be reminded to order them. Next, pick the asset account for inventory, in this case, inventory asset. Further down, when I sell a hat, I charge a price of $20, and that income should go to the income account called Sales of Product Income. In real life, your new standardized chart of accounts has an income account number 1394400 called Sale of Member Supplies, Clothing, Logos, etc. Now, notice the sales tax category field. If you aren't required to collect sales tax, you pick non-taxable. However, if you are required to collect sales tax, you pick taxable standard rate. That's what I will pick now. I will enter a cost of $10, cost of goods sold, and Lee Advertising as the vendor. Select Save and Close. Notice that IW Baseball Hat is now in the product list. Now a union member is at the window wanting to buy a baseball hat. He wants to write me a check. Select the New button with the plus sign at the top of the navigation bar and select Sales Receipt. Enter union member as the customer. From the Product Service column, select IW Baseball Hat with a quantity of 1. Scroll down to examine the sales tax and notice it properly calculated for you. I tell the guy the amount for his check, he writes it and hands it to me. I ask him if he wants a copy of his receipt and he says no, so I just click Save and Close, hand him his shirt, and say thanks. Now select Taxes from the navigation bar. And notice QuickBooks Online calculates sales tax from the settings you enter in the Sales Tax Center. And this same area keeps track of what you have collected and when your reports are due. Notice that the tax I just collected is listed. This area will also allow you to generate your sales tax reports and file them electronically if desired. So now you know how to set up and manage sales tax if you happen to be required to collect it.